Good morning, good morning, good morning. It's of course me, Ryan. What day is it? It's Monday. Of course it's Monday. Morning, Paul. Monday the 25th of November. Morning, Dom. Just wait for Mr. Brown. Can't even read the legals without him being here because he just doesn't trust me. Here he is. Invite to co-host invite sent. There we go. Come on down, Mr. Brown. I haven't even got any clean jokes to tell whilst we wait for him. Here he is. Come on.
Bloody hell. Good morning.
Do I want to ask what you were just doing then?
Well, I can explain. We've had these new little sort of glorified phone boxes fitted in the office, which I've decided to use today for the first time for this call. And the seat in here is like a bar stool, and it was a little bit higher than I expected. A bit of a challenge to get on it.
Oh, so I've got no chance then, basically.
Well, it is. It's about 4 foot high, so it's about your height.
Ah, well, okay, yeah, strong pass from me then. Uh, anyway, quickly moving on. Just do the legals. Nothing discussed on this space. This session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trainers PIQ or PIQ Suite, or indeed the affiliates and the hosts, which, as you know by now, is obviously the Mr. Michael Brown and me, Mr. Ryan Paisley. How the devil are you, apart from having problems sitting down?
Oh, well, I was going to say, apart from my acrobatics this morning, I'm very well, and you'll be pleased to know that I'm not wearing any makeup today. How are you?
I'm all right, thank you, mate. I'm all right. I had a Friday night was a bit messy, obviously for my birthday, and then recovered and yeah, just chilled out for the rest of the weekend. All set to go. Final week of November.
Well, indeed, and for all intents and purposes, you could argue, and we have already the effective final week of the year.
Well, I would definitely say that. If that means I can have the rest of December off, that'd be much appreciated.
Well, your CFO is listening,
Yeah, I
so I'll
did
let
notice
you
that.
you negotiate that with him. In the meantime, I'll crack on. Good morning, everybody. Happy Monday. It was an interesting end to last week, a positive one in terms of risk, with the S&P 500 gaining about a third of 1%, albeit closing south of the 6,000 mark. But the real moves were in the foreign exchange space, where we saw some significant dollar strength pretty much as soon as we wrapped up the call on Friday, although I would argue it was really a combination of dollar strength and significant euro weakness. And this came after the flash November PMI data out of the Eurozone, which was, even by the dismal standards of the single currency area, very, very grim indeed. The manufacturing index at 45.2 in November, down from the prior 46. The services index that slipped into contraction at 49.2. That's a 10-month low. And the composite output gauge, that also fell to a 10-month low and into contractionary territory at 48.1.
So can I?
In reaction to that, it was no.
Sorry, can I?
Go on.
Right, sorry. Come on. I've done well recently, not interrupting. So we're
Well,
due.
you have actually, to be
We're
fair.
very
Yes,
we're
yeah.
very overdue. Right, here's one for you then. So we're, to all intents and purposes, we're like what euro dollar is what 105, well 104 and a half, 104.60. So we'll call
Yes.
it 105 between friends. Right. What's next? 110 or parity?
Uh,
Obviously, this is not trading advice,
Gen.
people. This is basically me and Michael
No,
Brown.
please don't go and trade on the back of this.
This is Michael Brown
Out
and I
of
having a
those,
pint bet.
out of those two,
Would you want me to go
and you may be
first?
surprised by this, I would say 110.
Really? Well, we got ourselves
Yeah.
a bet then. Perfect. I know it's like, yeah.
Well, it's 1 pint. There we go.
Well,
We've
no,
got
I was gonna say,
40 odd witnesses.
a couple of rounds of the Stafford to make it interesting and far more expensive. But yeah, there we
Well, we
go.
can sort out the terms. Anyway, we did see the euro take a lurch lower on Friday. The common currency closed about 0.5% lower, but intraday we were down about 1.5% at one point. The low that we printed on Friday was 103.35, which was the euro's weakest level since December of 2022. The bad news on this side of the Atlantic does not stop there, though, I'm afraid. We also had flash PMI data out of the UK on Friday. The manufacturing index, that was at 48.6. 6, a 9-month low. The services index, that was at 50 exactly, which is a 13-month low. And the composite gauge, that was in contractionary territory at 49.9, and that was also a 13-month low. Cable also took a lurch lower on Friday, down by about 0.5% on the day, briefly trading below the 125 figure to its lowest level since May, although we have seen some of those dollar gains paired as the new trading week has got underway. In terms of other bits and bobs from the back end of last week, we saw markets continuing to remain relatively jittery about the geopolitical situation. Gold rallying by about 1.8% on the day, touching its highest level since the 6th of November at $2,715 an ounce. Interestingly, up to Friday, gold notched 5 straight daily gains, which is the best run for the yellow metal since early April. We also saw crude gain some ground into the weekend as well, trading about 2% higher and rising north of the 50-day moving average for the first time in a fortnight. In terms of other bits and bobs, in terms of catalysts, obviously the big one was news that broke late Friday into Saturday while I was asleep and Ryan was running around a bar somewhere, and that is that Donald Trump has announced his Treasury Secretary pick. That is going to be a chap called Scott Bessent. He is probably the most mainstream of the candidates that Trump could have chosen. What is kind of the standout, if you like, or what Bessent has talked about a lot in articles and podcasts, is what he's calling a 3-3-3 policy. That is to cut the budget deficit to 3% by 2028, to have 3% GDP growth, and to produce an additional 3 million barrels of oil a day. I would just note on the second point, the US economy has grown at a rate of above 2.75% in 7 of the last 9 quarters. So it's not exactly a stretch target he's setting himself, but obviously the budget deficit one will be probably the most difficult of those to reach. And we have seen some upside in treasuries, as particularly at the long end, where 10 and 30-year yields are down about 6 basis points in reaction to that pick as trade gets underway this week. Also, just last but by no means least, we have heard from plenty of ECB speakers over the last couple of trading days. On the back of the PMI figures, it's interesting to see that no one is really pushing aggressively for a 50 basis point cut. The market is pricing that as a coin flip now between 50 and 25 at the December ECB meeting. We have heard from some of the big hitters, including Vice President de Guindos, and we also heard from Chief Economist Philip Lane this morning. Everyone's still kind of talking about a relatively gradual pace of easing and going in 25 basis point installments. We will see how well that holds up. Of course, we have inflation data out of the Eurozone on Friday, but for now, it looks like those bets on jumbo rate cuts in Europe could be a little bit overdone. And that is your lot from me for now.
Thank you very much. Well, I will quickly start. Obviously, these are some headlines via our dear friend Zach. I'll start on the top one on Besant, because that's what you were just talking about. So just one thing to add on to what Michael said was is that he has stated that one of his policy priorities out of a few that he's mentioned was enacting tariffs. So any suspicions that anyone's had lingering around that perhaps Trump was a bit all bark, no bite regarding the tariffs, that seems to be completely dead in the water, because it does seem like Trump will go full into the tariffs that he's been talking about in the lead up to the vote. He's also Besant's also said that one of his top priorities is maintaining the status of the dollar as the world's reserve currency. Well, that's pretty much going to happen regardless of what you do. So there's a nice easy win for him there. Speaking of the dollar is set to start 2025 on a solid footing before facing risks such as faster inflation and a surging fiscal deficit over the coming year, according to the latest Bloomberg Markets Live Pulse survey. Speculators have increased their net short bets on 5-year Treasury futures to the largest on record in the last week, while bearish bets on the benchmark 10-year were the largest since October. That's from Reuters. A couple of, few headlines from China. China's blue chip index dropped to a 5-week low, while Hong Kong shares sank to their lowest in 2 months on Monday. This is obviously ahead of the US crackdown, looming trade war, and elevated geopolitical tensions, which are sapping already fading investor confidence. This is naturally leading to the possibility that the PBOC will cut the triple R rate to the end of the year. It's increased the chances of them cutting that. Sorry, I've messed that up. That's according to Chinese.
Do you want to start that
Yeah,
again, Matt?
the possibility that the PBOC will cut the triple R rate has increased. I'm going to blame whoever wrote this headline because they did mess that up. That's according to Chinese press. Again, this is very much like the Fed. So the unspoken mandate of whatever stocks are doing, that will encourage cuts if needed. Economists expect China exports to reach a historic high this year. But the bad news is that's because everyone's front running orders ahead of the tariffs. So don't read too much into big export numbers. In the UK PM Starmer said an op-ed in the Mail on Sunday that the government will set out radical reforms in the coming week to tackle the rising outlays on benefits and will get to grips with the bulging benefits bill. Again, this is another case of a Labour, well, Keir Starmer sounding very much Tory in his chat. The UK could
Oh,
go on.
well, I was going to say actually on that while we're
Yeah,
talking about the
go on.
government. Did you see my? Well, it was in the Times this morning. The CBI, who it is worth noting, the CBI have been relatively left leaning in recent years. They have done a survey, and the CBI survey suggests that 50% of employers are looking to cut jobs since the increase in national insurance contributions and the lowering of the threshold, and that about 66% of employers are reconsidering their recruitment plans in light of those changes. So, not the best news out of
But
the UK this morning.
before I need to look, did you retweet it from your Pepstone account?
No, I haven't yet.
Oh,
No, no,
I'll
no,
retweet it
no.
from my account then. Just think, otherwise we'd have done it anyway. Right, that's done. Okay, so UK could claw back pension tax breaks from asset managers that failed to invest enough domestically. The head of the British Business Bank, so I said it in a warning about the stakes for the industry as the government pursues a key growth initiative. Again, this is one of the ploys that Rachel Reeves is trying to come up with to force investment into UK domestically. Again, I believe I might have said this with Helen Thomas. It might be Newmarket, but I think it was Helen on the Thursday political show that whenever a government is trying to force people to invest, it never ever ends very well. You want to create an environment where they want to invest. That's normally the better way to go about these things. UK workplaces rank among the worst in Europe for long hours, tight deadlines, and limited autonomy without being any more productive. That's according to a report prepared by the new Labour government plan as they plan tougher rules for employers. One in
Well, I mean,
crypto. So go on.
well, I was just going to say, are we really? Is that the benchmark? We're just comparing ourselves to, layabout French farmers who spend all day setting tires on fire and Spaniards who have a 3-hour nap every
Well,
afternoon.
well,
Is that
well,
what we're doing
well,
now?
well, don't slag off the Spaniards. I quite, the 3 hour like siesta is quite appealing. Let's be honest.
No,
Um,
but you have to go to sleep. You can't just sit in the pub for 3 hours.
Oh, in that case, off that. Sod that. Right, in crypto, Cam, if you're listening, this one's for you. Cantor Fitzgerald's Howard Lupnick, the incoming Commerce Department chief, in a move to strengthen his alliance with Tether Holdings, where Cantor is discussing receiving support from Tether for its planned multi-billion-dollar program to lend dollars to clients who put up Bitcoin as collateral. Just to stress, this is wearing his Cantor's hat, not his Commerce Department hat. So don't think this is the US government doing that, but it obviously is bullish for crypto if that's what the Commerce Department chief is doing. Geopolitical news. We'll start in the Middle East, where, as we know, it's always a barrel of laughs. Israel is moving forwards to a ceasefire in Lebanon with Hezbollah militant group, and that's according to Axios. However, Khan News, citing Israeli officials, said there was no green light given an agreement in Lebanon, with issues still yet to be resolved. Moving further afield, Japan and the US aim to compile a joint military plan for a possible Taiwan emergency that includes deploying missiles. Senior White House officials met on Friday with telecommunications executives to discuss China's significant cyber espionage campaign targeting the sector. That's according to the White House. Now, this will obviously be related to the undersea cables around the Baltic that have been dragged up apparently because of a loose anchor, but other people are suggesting it was done very much on purpose. Taiwan's defense ministry on Monday reported that a Chinese balloon had been detected over the Sea of Taiwan, to the north of the island. It's the first time since April has reported such an incident in what views as part of a pattern of harassment by Beijing. Russia's armed forces have recruited hundreds of Yemeni men to fight in Ukraine, brought by a shadowy trafficking operation that highlights the growing links between Moscow and the Houthi rebel group. And finally, in geopolitical news, Iran is planning to hold nuclear talks with Britain, France, and Germany, and the EU as a whole on November the 29th in Geneva. And finally, for me, just a few headlines via equities. It's been pretty much a double headshot against Intel over the weekend, with the US government plans to reduce Intel's preliminary 8.5 billion federal chips grant to less than 8 billion. So that's a bit of a hit. And also, Apple may shift orders of its A20 Pro chips. Oh no, sorry, I've completely missed this messed this headline up.
Oh no!
Sorry, it's actually this is a pro.
Again.
Yeah, this is I don't know. So it's a Monday, mate. It's a Monday. Give me some break. Also, I'm still milking my birthday. Let's be honest. So this is good news for Intel. Sorry, I thought they were moving orders from TSMC to Intel, but it appears they're moving the chip orders from TSMC to Intel. So that's a good news. That's these chips will be used in the iPhone 18 series, apparently. I'm still using an iPhone 10, I believe. Apple CEO Tim Cook is visiting China for at least the third time this year. Tesla has launched a limited time promotion of the Model Y car in China, offering a 10,000 won discount on its outstanding loans. And OpenAI is in talks with Samsung Electronics to bring its AI capabilities to Samsung's electronic devices, which could mean a challenge to Google, which already provides AI services on Samsung smartphones. And finally, from me, which you'll be glad to hear because I seem to be reading at the levels of a 3-year-old today, funds managed by Goldman Sachs will write off nearly 900 million after Swedish lithium-ion battery producer Northvolt filed for Chapter 11 bankruptcy earlier last week. So a bit of a hit for Goldman's.
Indeed, yes. I fear you may have been a little bit harsh on 3-year-olds there, Ryan, but never mind.
Wow.
Right, moving on. Well, actually, to the weekend. Firstly, an apology. I haven't been able to create my usual calendar graphic this week. We've been going through some sort of IT migration here at Pepperstone, and well, I'm not very good with computers at the best of
I was going
times,
to
let
say, couldn't
alone
you get the
Wednesday.
Etch a Sketch out or something like that?
Oh, mate, honestly, I'm lucky to even have an email account this morning. I think that's the way things are going. But anyway, I can verbally tell you what's going on, and things get underway in about 15 minutes' time with the latest IFO sentiment surveys out of Germany. In keeping with pretty much all German data of late, we're expecting a pretty grim number. The business climate index, that's seen falling to 86 for a prior 86.5. Although, of course, downside risks or risks to that consensus, I should say, are to the downside given the ongoing political shambles that we see in Germany. Also due a little bit later on today, we have national activity figures due from the Chicago Fed, regional manufacturing figures due from the Dallas Fed, and we also have 2-year supply from the United States as well. Moving into the remainder of the week, of course, it is a holiday shortened week with Thanksgiving on Thursday. Although markets are open on Friday, I would expect, conditions to be like my hair, very, very thin indeed. And of course, we do also have an early close in the United States on Friday as well. In terms of scheduled events, though, tomorrow we have the latest consumer confidence figures from the United States. We also get minutes from the November FOMC meeting, due a day earlier than usual, given Thursday's holiday, and we have 5-year supply from the United States as well. Into Wednesday, which is by far the busiest day of the week, things are likely to be a little bit hectic during the APAC session. We have CPI figures due from Australia, where headline inflation is seen at 2.3% in October, up from a prior 2.1%. We also have a policy decision due on Wednesday from the Reserve Bank of New Zealand. Reserve, not royal, for Ryan's benefit. The RBNZ are
Look,
expected
I've
to
done that a
deliver.
couple of times. And look, I'm sorry, but I'm bring back the Commonwealth.
Well, yeah, Ryan's one-man crusade will run into the Antipodean Republican movement, but never mind. In terms of that RBNZ decision, consensus expects a 50 basis point cut to 4.25%, although the market is pricing in around a 1 in 4 chance that the RBNZ do indeed deliver a larger 75 basis point cut, and that dovish repricing was one of the reasons why the Kiwi dollar traded so soft last week. Also on Wednesday, we have a veritable deluge of US economic releases, 3 days worth of data being squeezed into one. That includes the second estimate of Q3 GDP, the latest durable goods and jobless claims data, the continuing jobless claims print that will coincide with the November non-farm payroll survey week. Also on Wednesday, we have the latest Chicago PMI figures, the Fed's preferred inflation index, which is, of course, the PCE and core PCE price indexes, and also a 7-year auction on Wednesday as well. And then after Wednesday, things quieten down quite dramatically, with US participants checking out for a long weekend for Thanksgiving, meaning that Thursday brings pretty much nothing by way of major macro events. And Friday also has a relatively quiet calendar, although we do on Friday have the latest flash inflation figures due out of the Eurozone. Headline CPI, that's seen rising to 2.3% in November. That will be up from the 2% that we saw in October. And core inflation, that's also expected to tick higher to 2.8% for a prior 2.7%. And that may just kill off some market bets on a 50 basis point ECB cut. But that is pretty much your lot for this morning. I think it's going to be a bit of a week of two halves. And
Oh
as we
God.
have alluded to, well, as we've alluded to many, many times now, I think most participants are probably going to
Yeah.
use Thanksgiving as the effective end of the year.
Well, if they're still at the desks,
If
of
they haven't
course.
already, yes, exactly.
Yeah, no, exactly that. Yeah, it's going to be one of those where, especially from Thursday onwards, very, very thin and wispy, like Michael's Barnet, market conditions. So
All right, I've made that joke.
yeah, but I got to make it myself. It's like if I don't do it myself, I've got to itch all day. Um, but
Oh
yeah,
dear.
so if you are trading this week, keep it tight. And obviously, as we've said many times already in the recent morning blasts, you ain't going to make your year in the final few weeks of the year, but you can very easily lose it in the final few weeks of the year. So trade carefully if you are trading out there, or just if you have had a good year, just take a long break. There you go. But Michael Brown. So just to confirm, you're Euro 110. I'm Euro parity, right?
Yeah, are we putting a time limit on this, or are we just
Well, no, just
whichever gets here first?
what trades next? There you go.
Yeah, fine, fine. Well, there we
Perfect.
go.
Right.
I mean, this is recorded, so that
Oh
neither of us
yes.
can
Yeah. Yeah.
squirm out of it.
Right, cool. All right, well, Mr. Brown, thank you as always, listeners. Thank you very much as always for listening in. I'll try and put my teeth in for tomorrow's show. Uh, we will see you tomorrow.
Cheers,
Goodbye.
guys.
Do 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 do.